We're jumping straight into new era energy and digital today. Everyone's watching the price action, but the real story is the high-stakes pivot from helium exploration to hyperscale AI infrastructure.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And hey, before we really get into the weeds of this wild story, make sure you hit that subscribe button and smash the like. We're here to simplify the noise around these volatile tickers so you don't have to go it alone.
And there is so much noise to cut through today. I mean, if you've been looking at the chart for New Era Energy and Digital, it's been a roller coaster, is putting it very, very mildly. It is violent.
Oh, it's absolute chaos. But in like the most fascinating way possible, we're talking about a stock that just recently saw this massive surge. What was it? Up nearly 24% in a single day.
Something like that, yeah. To around $5.64.
But that's happening right alongside these just catastrophic drops of over 40%.
Yeah.
It's whipping back and forth.
Right. And usually you see that kind of volatility and you just think, okay, it's pure speculation or meme stock energy. But here, there's a real fundamental conflict at play.
A genuine story on both sides.
Exactly. On one side, you have this incredible narrative about the future of AI, about solving the energy crisis. And on the other, you have allegations that could, frankly, just end the company.
It's the ultimate showdown. Is this a legitimate powered land play that's going to solve the biggest bottleneck in the AI industry? Or is it, as some very aggressive short reports are claiming, just a scheme run by a skeleton crew that's destined to collapse?
Let's start with the bull case. Because if you can ignore the controversy for just a second, the strategy they're pitching it's actually really compelling. It addresses a very real problem.
It's incredibly compelling. So let's unpack this pivot. The company used to be called New Era Helium. They were, just digging for gas.
Old school energy.
Totally. But they realized something crucial. They are sitting on about 137,000 acres in the Permian Basin. That's New Mexico and Texas.
A huge legacy asset.
Exactly. But instead of just selling the gas, they decided to pivot. They're taking that land, those energy reserves, and turning them into what they call powered land.
And I want to pause on that term, powered land, because it's becoming a bit of a buzzword. For anyone who hasn't heard it, what exactly are they selling here? Why is that so different from just, selling a plot of dirt?
So think about the biggest problem for a company like Amazon or Microsoft or Google right now. They've got the chips. They've got the data. They have all the money in the world.
What they don't have is power.
They don't have power. If you want to build a massive data center today and you go to the local utility, they might just laugh and say, great, we can hook you up in 5 years.
Or 7 or 10.
Yeah.
The grid is completely clogged. Transmission lines are at capacity. It's a massive roadblock for the entire AI build-out.
Exactly. It's the bottleneck. So New Era comes along and says, hey, we have the land, and more importantly, we have the natural gas reserves right underneath it.
So they can offer what's called behind-the-meter power.
That's the key phrase. They generate the electricity right there, on site, using their own gas. They completely bypass the public grid.
Which means a hyperscaler could theoretically get a data center up and running years faster than the traditional route. You're not waiting for the local utility to build a new substation for you.
You're building your own power plant right next door. It's a turnkey solution. They even call the buildings powered shells. Basically, here is the building, here's the power, just bring your servers and plug them in. It takes all that complexity off the table for the tech giants.
And this isn't just a PowerPoint deck, right? They've been making actual moves to prove they can execute this.
Oh, big moves. They acquired a company called Texas Critical Data Centers. That was a $70 million deal.
70 million. So not small change. That's cash equity.
Cash equity and convertible notes. It's a serious commitment to getting the technical expertise they need in-house.
And that acquisition is supposed to be the launch pad for these huge projects?
Right. They're talking about a partnership with a company called Primary Digital to develop a gigawatt-scale campus. Just for perspective, a gigawatt is it's massive. That's enough energy to power a medium-sized city.
A whole city. And they're also expanding to a 250-megawatt campus in Ector County. So if you're a bull, you look at this and you say, okay, they have the land, they have the energy source, and now they're buying the infrastructure to build a real empire.
And let's look at the balance sheet for a second, because that's usually where these big pivot stories fall apart. Do they actually have the cash to keep the lights on while they build all this stuff?
Surprisingly, it seems so. From the SEC filing data we have, they showed a cash reserve of roughly $141 million. That is a pretty significant war chest.
That gives them runway. And their debt levels.
Relatively low, actually. The debt-to-equity ratio is around 0.29, so they aren't drowning in loans while they're trying to do this.
Which brings us to the core of the bull argument. Unlike a pure-play crypto miner or a standard data center that has to go buy power from someone else.
New Era owns the fuel. They've got 1.5 billion cubic feet of helium and gas reserves. It's vertical integration. They control their own destiny. At least when it comes to energy costs, it's a moat.
Okay, so that's the bull case. It's a powered land play, vertically integrated, sitting on a pile of cash, ready to feed the AI beast. It sounds fantastic. If we stopped the show right now, you'd probably go out and buy shares.
It sounds like a multi-billion-dollar idea, for sure.
But, and it's a massive, massive but, we have to talk about the reality of the operation. You mentioned they're building gigawatt-scale infrastructure. These are unbelievably complex engineering projects.
Unbelievably. So how many people actually work at this company?
See, this is where it gets really interesting. And by interesting, I mean slightly terrifying if you're holding the stock.
Okay, go on.
7.
7.
No. 7. 1, 2, 3, 4, 5, 6, 7. As in, they could all fit in a single minivan. Maybe a large SUV if they wanted a bit more legroom.
Okay, let's let that sink in for a moment. 7 employees. And they are claiming to compete with hyperscale giants, building infrastructure that usually requires teams of hundreds, if not thousands, of engineers and managers.
It's a staggering statistic. And it's the very first thing the bears point to. How does a 7-person team execute a multi-billion-dollar infrastructure pivot, even if they're outsourcing everything? Just managing the contractors for a project that big would take more than 7 people.
And it's not just us asking these questions. There have been some very loud, very aggressive reports coming out against them.
Oh, absolutely. We have to talk about the Fuzzy Panda report.
Fuzzy Panda Research. They're a well-known short-selling firm, and when they release a report, they aren't trying to make friends. They are betting their own money that the stock is going down.
They're trying to tank the stock because they believe it's worthless. And their allegations are serious. They allege that New Era is spending way more on stock promotion than on actual operations. They're basically calling it a promote scheme.
Meaning they're just hyping the stock to sell shares, not actually building a business. They're marketing the equity, not the product.
Correct. And that report triggered a cascade. Suddenly you have law firms like Rosenlaw and Pomerantz launching investigations. But the allegations go even deeper than just marketing spend. They attack the credibility of the leadership directly.
The CEO, E. Will Gray II.
Right. The short reports allege he has a history of, well, failed penny stock ventures and what they call sketchy-related party dealings. The argument is essentially, look at the track record. Do you trust this team to build the future of AI?
If the pilot has crashed the plane 3 times before, do you really want to get on the 4th flight?
That's the question they're posing. But character attacks are one thing. Actual legal action is another. And there's a lawsuit happening in New Mexico that isn't just some disgruntled shareholder. This is the state government.
This is the New Mexico Attorney General. That's a whole different ballgame.
A huge deal. The lawsuit alleges a fraudulent oil and gas scheme regarding 87 wells.
Fraudulent how?
The state is alleging they misled investors and the state about the status and cleanup of these old wells. Now, the company's defense is, look, those wells are immaterial. We're getting rid of them. We're an AI company now. We don't care about that old stuff.
But the market cared.
Oh, the market cared a lot. When that news broke, the stock dropped 41%. Because even if the wells are immaterial to future revenue, a fraud allegation from an attorney general creates a massive legal overhang.
It just scares institutional investors away. You can't really get BlackRock or Vanguard to buy a chunk of your company if the AG of New Mexico is calling you a fraud.
It raises the question of governance. If there was funny business with the old wells, how can we trust them with the new data centers?
And speaking of trust, let's look at the current financials. You mentioned the cash pile, which is good. But are they actually making any money?
No. I mean, it's pretty clear they are burning money. But it's the margin that is just, it's breathtaking. Their reported trailing 12-month net profit margin is negative 2,610%.
Negative 2,600%. I'm just trying to wrap my head around that math.
It's a number that almost doesn't make sense. It means for every single dollar of revenue they bring in, they're losing $26. Now, to be fair, in a pivot phase, you expect losses, you expect heavy spending. Amazon lost money for years.
Of course.
But a negative 2,000% margin is extreme, even for a startup. It suggests the revenue is almost non-existent compared to the overhead.
And that burn rate leads us to the other big fear. Dilution. Because if you're losing that much money, you need more cash from somewhere. And if you aren't getting it from customers, you have to get it from investors.
Exactly. And that's the other shoe that dropped. They filed a shelf offering for $350 million.
Let's explain that. A shelf offering basically means they've registered new shares that they can sell into the market whenever they feel like it.
Right. It's like putting a giant for sale sign on a huge chunk of your company. And when they announced that, the stock dropped another 20%. Investors are terrified that the company is just going to keep printing new shares to fund operations.
And that dilutes the value for everyone else. If you own a slice of the pizza and they suddenly decide to cut the pizza into 1,000 more slices, your slice becomes microscopic.
So we have a very clear picture of the battlefield. On one side, the bulls see a cash-rich company with the perfect asset-powered land at the perfect time.
And on the other side, the bears see a 7-person team, staggering losses, and this dark cloud of legal allegations ranging from stock promotion to outright fraud.
It really is a binary situation. There's no middle ground here. You don't put a moderate hold rating on a stock like this.
So, for anyone listening to this in 2026, what are the trigger points? What's going to decide who wins? Because we can speculate all day, but eventually the cards have to be turned over.
I think we're looking at 3 major things in the next few months. First, earnings visibility. We are expecting the Q4 or full year 2025 earnings report sometime in Q1 2026, so probably April or May.
And what are we looking for in that report? Because we know they're losing money. That's already priced in.
We know the bottom line will be ugly. That's a given. The real test is the revenue composition. Will they show any material revenue from digital infrastructure? Or is it still just net losses from the old oil and gas business?
If they can show, hey, look, here's a check from a data center client, even a small one, that completely changes the narrative. It proves the pivot is real.
But there's a gap in visibility right now, isn't there? I've seen complaints.
A huge gap. Some sources are complaining they haven't seen a recent 10K or 10Q filing. So if that report is delayed or if it comes out and it's a nothing burger, credibility takes another huge hit. In a situation like this, silence isn't golden. Silence is terrifying.
Okay, trigger number 2 has to be the legal side.
Definitely. We need to watch that New Mexico AG lawsuit. If it gets dismissed or maybe settled for a small fine, the stock probably rallies hard. It removes that fraud label.
But if it drags on, or worse, if the SEC gets involved based on these shareholder investigations.
That's a critical blow. An SEC enforcement action is usually the death knell for a company of this size. It freezes your ability to raise capital. It's game over.
And finally, number 3. Operational proof. We talked about the powered land thesis, but land is just dirt until someone pays you to use it.
This is the holy grail, the anchor tenant. You see rumors flying around on message boards about a hyperscaler lease, maybe Microsoft, maybe Amazon, maybe Google, but right now it's just that, rumors.
Until the name is on a contract, it's pure speculation.
Exactly. They need to announce a lease. Amazon is building here. Google is building here. If they land that, the short thesis about the 7 employees starts to matter a lot less.
Because a big partner validates the whole model.
Right. If Amazon does their due diligence and signs a billion-dollar check, the market is going to trust Amazon's lawyers over the short sellers. But until then,
they're just 7 guys in a minivan with a lot of land and some lawsuits. And we also need to see actual progress on the Texas critical data centers build-out. Like, are there bulldozers moving dirt? Is concrete being poured?
Real assets versus paper promises. That's the whole divide right there. You can't fake a gigawatt campus. You can see it from space. So show us the construction.
So let's bring it all together. What does this mean for the person listening right now who's thinking, this sounds exciting, but also incredibly scary?
It means you are looking at one of the highest risk, highest reward plays on the market today. This is a truly binary trade.
Binary.
If the powered land thesis works and they actually secure a major tenant, those 137,000 acres become a gold mine. In an energy-starved AI world, that land is priceless. The stock could go up multiples from here, easily.
And if the legal allegations hold true?
Then the 7 employees logic kicks in, and this company faces an existential crisis. It could go to 0. The equity could be wiped out entirely if the fraud allegations stick or if they just run out of cash before landing that big fish.
It really is a coin flip then.
It's a distressed trade. If you're looking at this, you have to have a 6 to 12-month horizon for that legal clarity. This is not an investment for the faint of heart. This is not where you park your retirement savings.
It's a high-stakes bet. You're betting on whether the assets are real or if the whole thing is just a mirage. You're betting on the dirt or you're betting on the lawsuits.
And that's the reality of the market sometimes. It's not always about slow and steady growth. Sometimes it's about navigating a perfect storm.
But hey, that is where the opportunity lives, right? If it was easy, everyone would do it. But please, do your own due diligence on this one. Really read the filings. Don't just read the headlines.
Wise words. We'll be keeping a very close eye on those earnings reports this spring.
You know we will.
Make sure you're subscribed so you don't miss that breakdown when it drops. See you on the next one.
Catch you later.